Good morning friends and welcome to the pre-market session. Friends, we had a major sell-off across the markets and across the asset classes. US markets were down about almost 2.5%. European markets were also down anywhere from about 0.5 to about 1%. And Asian markets also, when we look at it, they also opened down almost 2%, but there is a bit of a recovery, so most of them are down about 1 to 1.5%, and the Chinese markets are shut today. Friends, it all started from China. The PMI data that came out from China were weaker than expectations. Then some of the data points that came out from Eurozone and Germany were weak. And finally, US also, the home sales data and the business activity data both were negative. And to make the matters worse, we had a major downgrade by Moody's of 15 top banks like JP Morgan, Morgan Stanley, Credit Suisse. So there was some kind of a panic reaction to all these developments. Friends, what is important to note is that most of the commodities also have corrected quite sharply, and Brent crude for the first time after in fact almost a year or so is down below 90, and so is the case with most of the other commodities. The only point is that though we have seen a major sell-off in the crude, we haven't really seen any strength in the rupee. In fact, rupee closed pretty weak at about 56.30, which is what is actually unnerving a lot of foreign institutional investors, that despite the macros turning a little better, particularly the commodity prices going down in the crude, but it's not reflected in the movement of the rupee, which is a bit of a concern. Also in terms of flows, friends, FIIs were sellers to the tune of about 257 crore in the cash market, and the domestic institutions were buyers to the tune of 69 crore. Let us do a technical check with Gaurav to get some idea about what one can do in the current scenario. Hi Gaurav.
Hi.
We saw a very quick recovery in the market in the last 1 hour of trade, and important levels were taken out. In fact, 5140, 5150, which was proving to be a major obstacle. Actually, market just moved above that. We are somewhere close to 5200, but looking at the SGX Nifty today, we would open about 50-55 points down. So what's your overall sense? How does one play this market?
Yeah, we'll first have a look at overall picture. Overall picture shows that from the low of 4770, Nifty has bounced sharply. It has surpassed upper end of the falling channel and is consolidating above the upper channel line. It is also consolidating above 40 DEMA and 20 DMA. Daily momentum indicator is taking support at the 9-period moving average. The consolidation on the lower time frame, that is on the hourly chart, has taken form of a diamond pattern, and it has broken out on the upside. It has surpassed upper end of the pattern. It has taken support at 20 and 40 hourly moving averages. Hourly momentum indicator has also started fresh move on upside from the equilibrium line. All these signs indicate that this could be a start of fresh move on upside, and Nifty can surpass upper end of the trading range and enter into a higher territory with a target at 5300. That is 61.8% retracement of the entire fall. However, one should keep in mind that this is last leg on upside, and one should not be aggressively long at this point of time.
Also, just to interrupt you, in case somebody wants to play for that 5300 move, what could be the possible stop or the level on the downside that one can look at?
Yeah, in the last trading session, Nifty formed a bullish outside bar. This makes the yesterday's low a crucial support, and the level is 5093. So one can keep a tight stop loss at this level. Else, if somebody wants a higher stop loss, he can place stop loss below the swing low, and which is also below 40 DEMA, and the level is 5041. So these levels need to be watched out carefully for any long position.
So and 5041 and 5093 are the critical supports for any possible up move that you may want to play.
Yeah, if these levels are broken, one should not remain in long position.
Right.
And on the upside, 5300 should be short-term target.
Right. Also, if you could give us some sense of the Bank Nifty and the outlook there.
Yeah. This is the chart of Bank Nifty. Daily chart of Bank Nifty. Daily chart shows that Bank Nifty is moving up in a channelized manner. In terms of wave structure, it is forming complex pullback, and recently it has taken support at lower end of the channel as well as 20 and 40 hourly moving averages. So crucial support for Bank Nifty is 9769, that is yesterday's low, and the swing low, that is 9619. So one can keep stop loss below these levels for long position, and expect Bank Nifty to hit upper channel line, which is at 10635, and equality with previous move, and the level is 10,785.
Right. Any specific ideas that you have shortlisted for us?
Yeah. On stock specific front, first is BHEL. BHEL has broken out from a small bullish flag pattern, and Delhi momentum indicator is on the verge of a bullish crossover. So BHEL could be a candidate for initiating long with supports at 216 and 211, and key resistances at 226 and 240.
Also, in case of BHEL, we also hear that there is going to be some kind of positive news because the government might actually impose the import duty. And a couple of brokerages have come out with a positive bias. So in case somebody wants to play for a move, maybe one could look at buying a 240 call of July, which is available for about 3 rupees.
The next one is SDFC Bank. SDFC Bank has formed fourth wave correction. In that, it has also formed a bullish flag pattern and has broken out on upside. In terms of candlestick pattern, yesterday's candle is an engulfing bull. So this makes SDFC Bank a good candidate for initiating long. And supports are 531 and 526, and key resistances are 552 and 570.
Right, Gaurav. Thanks a lot for that update.
Thank you.
Friends, in terms of news, final order of CII on the cement companies is out, and they have actually fined them to the tune of 6,300 crore. The top 11 cement companies, which includes Ambuja Cement, ACC, Ultratech, Binani Cement, JP Associates, and few others. Even some of the south-based companies like India Cement and Madras Cement also are part of this, which is arrived at of almost 50% of their 2010 and 2011 profit, and this amount needs to be paid by the cement companies in 90 days. Cement companies would definitely go in for litigation, but the fact of the matter is that we've seen a good run up across the cement companies, and the fine which has been levied is quite huge. Just to talk about JP Associates, the fine is 1,300 crore, which is a huge sum. So there is going to be some kind of a negative bias on the cement companies because we've seen them run up also in the past few days. Also, the government has actually rejected the Vedanta's offer for Hindustan Zinc. So Hindustan Zinc may see some kind of a negative action. Also, friends, GMR actually has paid 700 crore to IDFC as a part of the debt. So GMR could be one stock to look out for. And finally, Cox and Kings is looking at raising some money through their UK subsidiary of about $150 million. So Cox and King also could remain in action because of this development. That's it from all of us, friends. See you tomorrow at the same time.